Hey everybody, Boris, that's from BK Force. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar for April 16th to April 20th, 2018. And definitely a much more active week next week as we enter into the meat of a lot of the economic data sets. And the big question, I think, is really going to be at the start of the week with the U.S. retail sales, whether the U.S. consumer is going to provide some sort of a lift for the dollar. The dollar has been buffeted back and forth, both on data sets and much more, of course, on geopolitical wins. But overall, there is a slow but steady bid building up in a dollar as U.S. rates continue to start to climb back up. The market become more and more convinced that the Fed is going to raise rates. And more importantly, the other side, the euro, the yen, even the pound being the exception, of course, but we'll talk about that in a second, are actually going the other way, where the monetary policy remains very accommodative. The key thing here is the differentials in monetary policy, all the geopolitics aside, should begin to press in the favor of the dollar as we go forward. We're just beginning to see the inkling of that, perhaps last week. And next week, we need to see the data set to confirm it. So we'll be watching it very carefully. As far as the levels go, the levels right now pretty much remain the same in the euro, 22.24. But we are inching closer to that lower end of the boundary on the trend. In dollar yen, this 108 level is very, very key. If we can take it out, we've been flirting back and forth. We took out the 107s, but now came back down a little bit on the close on Friday. The big run is going to be through the 108s. If we can take that out, that will really clear a lot of technical overhead. We'll take a look at the charts in just a minute. And cable, of course, has been the star of the show, not necessarily really because of anything in the UK, but because of cross flows. I'll discuss that in a little bit as we get into the charts. But let's take a look at the event risk calendar, see what's going on. So the first and foremost thing, front to the center, Monday, get the U.S. retail sales. Really need to see a strong bullish number. We are actually, Kathy, is bullish the retail sales, stronger gas numbers, higher rise in average hourly earnings. If that is true, that should provide us, hopefully, with the push we need to take the dollar through the 108 in dollar yen. Next, we kind of go into the UK data, and the UK data is also going to be pretty interesting because this is the key wage data the market is going to be watching, and we're actually kind of bearish the UK data because both manufacturing and services reports showed a slowdown in job growth. So this is going to set us up for a very interesting trade in cable as to whether it actually may have peaked this week, and we could be seeing a retrace next week near the post-Brexit highs. We'll take a look at that in a minute on the charts. And then as we go further into the week, we get basically really start going into more calm dollar land, which I'll cover in a little bit. Nothing much on the European side except, well, we get inflation data out of UK, which will also be confirmatory, and then we'll get the BOE statements as well. But that's about it. And then the rest of the week, also, we end up with retail sales. There's really nothing on the European side except for CPI, which is final data. None of it is really market moving that should have any impact. It'll all be statements and rhetoric out of Europe that could move the euro. But UK definitely going to be a big focus both on the jobs numbers and then a little bit later on the inflation numbers afterwards. US, it's really front and center with the retail sales. That's what's going to be the big trigger. So looking at the charts, and this is where it gets kind of interesting, there is no doubt here that the euro is compressing to the downside. It's hard to see. It's a very, very subtle, slow shift, but you can see a series of lower highs. You see the kind of a continuous compressing triangle here. And we are certainly looking to aim for the lower end of this range here into the 22s. As the key support test of the support. If that gets broken, that would be a pretty strong signal dollar is really ready to run, and we could actually see the unwind all the way down to the 120s. We've been consolidating here between 22 and 24 for a good 2-3 months, and it's really starting to look like a topping formation. You've had 1, 2, 3, 4, 5 tops, and each of them getting successively smaller as we go further in time. So the probability technically really lies to the downside. All we need is some kind of a positive push out of the US data. We had negative push out of the European data because the ECB came in last week and basically said they're going to stay stationary even if they let the QE taper, that even post-taper, they're not going to go and raise rates. And that actually had a massive impact to the downside and that's what we're seeing here as a potentially continuation trade all the way down to the 22s. So watching this level very carefully, we're at key 20 period moving average support. Got to break that to the downside to really open up the floodgates for a move down. With dollar yen, the trade is the exact opposite. We're looking for the upside break. Today looked like the day, and then it ended up very, very disappointing for the bulls. We kind of ended up near the lows of the day. That's an ugly looking candle, certainly not giving you a lot of confidence. We may have to come back down below the 107 to consolidate. We'll see how things trade out on Monday. If Monday comes out, we can have such a positive day that we take out the highs and actually take out the 108s. That would be a very, very bullish construct, and we really would have much greater confidence at that point that the dollar yen has really made a truly rounded bottom, a breakout move, and a move towards the 110. It's all really coming down in some ways to these key levels. The break of the 122s in euro signals a move towards the 120. The break of the 108s in dollar yen signals a move towards the 110. All of that dollar strength that we're seeing. Pound, of course, got a huge boost from euro pound flows. We'll talk about that in the crosses. But the key thing here is that the pound did not break the 143s today and kind of ended up on the lows of the day. So a lot of UK data is going to be very contingent on how well the pound trades. We are certainly flirting with the post-Brexit highs, this 143, 144. But again, to really get confident that this is going to make a run towards the 144s, we've got to take out the 143s from set high today. If we can't muster up that kind of a trade by Monday, Tuesday, the probability that we drift back down towards the 140 becomes stronger and stronger. This looks like could have been a failed breakout today. So watch that very carefully as we go forth next week.